afternoon, everyone. Thanks for joining us today. We have an update presentation with Morien Resources. CEO Dawson Briscoe's here to give us a bit of an overview. I think it's been about 2 years since they presented last, so this will be an sort of A to Z lesson in Morien Resources. As per usual, there will be a Q&A section at the end, so feel free to input your questions in the Q&A box at the bottom. And this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on their website. And with that out of the way, I'd like to introduce Dawson. Hi, Dawson. Thanks for joining us.
Thanks for having me.
Yeah, so lots of interesting news lately. Excited to get an update on what's going on with Donkin and with Morien.
Yeah, the timing couldn't be perfect. Really couldn't be better. Now's after a 225% gain last year, this is the first presentation we've done since that event, so the timing's good.
Great. Well, yeah, maybe you could give a little bit of background on yourself and the company and tell us what's new.
Sure. I'm a geologist by way of background. I spent about a third of my career wandering the Gobi as a geologist through an Xstrata coal alliance, and then about another third in the corporate and business development role, and then the latter third as the CEO and president of Morien Resources, and that's what the presentation is about today. The title, dividends, buybacks, growth might have caught your eye. These aren't words that you usually see strung together, certainly not when it comes to a small cap like Mox. Not many of them are paying dividends, buying back stock, and yet still possess the re-rating potential that Morien has. And as we go through this relatively short presentation today, I hope to convince you that our blueprint, at this company for creating real shareholder value is rare, at least in the capital markets. So this was the share price performance in 2022 of all of the mining royalty companies listed on the main board in the venture TSX, -45 up to +60%. This was Morien's performance. And yet, despite these gains, I think the best days for the company are certainly ahead of it. I think you'll agree as we go through this slide deck. The point of showing you this is to highlight what happens when you have a small number of shares outstanding. Good news creates big jumps when the shares are tightly held, and this is what we can expect with more good news to come. And the driver of this event, of this share price growth, was the restart of the Donkin mine in September, where we have a high value royalty. This was quickly followed by the first commercial sales from the mine in late October, and this allowed Morien to reinstate its quarterly dividend program in December. But before talking about Donkin and dividends, let's just take a quick look at our capital structure. The company has no debt, no warrants, just 50 million shares outstanding, a sustainable and growing working capital position. I say sustainable because we haven't financed this company in 7 years. Our shareholder registry consists of 15% held by insiders, being management and directors. The Cline Group, who own the Donkin mine, have 12%. And the remainder is held by various brokers and retail high net worth accounts. We have a highly experienced team here at Morien, with all bases covered, from capital markets to geology to mining engineering, specific to underground coal mining, abundant royalty sector experience. And this is entirely by design to keep our company small. We are not like anyone else. If we were, I'd be sitting here today talking about some new equity raise or new or previous share issuance to support a company with 10 to 15 employees that wants to buy some early stage, 7 to 9 year lifespan asset in a foreign jurisdiction. Instead of that, we're buying back stock, our own stock, we're issuing dividends, we're driving down costs, we're focused on stable bulk commodity side of the mining sector that yields incredibly long asset lives, where we have operators that are well-funded with proven track records and on projects that are either producing or are permitted, and they're in stable jurisdictions. And so while a lot of companies say they're different, we actually mean it. And one consistent theme with mining companies is that market caps get bigger, production gets bigger, reserves get bigger, and so too does the total shares outstanding. And in a lot of cases, the share price doesn't follow. It's not a shareholder-focused approach. With Morien, we're drastically different, and we have a track record to prove it. Insiders own 15% of Morien. That's up from 5%. Our overheads are down 50%. Balance sheet management is and has always been extremely important to us. We only have 50 million shares outstanding, as I said a moment ago. This is not due to some share rollback. This is from disciplined capital allocation, from a strategy that's allowed us to actively buy back stock since 2015. We've successfully reduced our share count by 17% at a cost to Morien of $5 million. And during that time, we haven't financed this company. One of the best signals to any potential investor, regardless of the sector, is insider buying. And that's what we've seen happen throughout Q4 of last year. Directors were buying and adding to their positions. We're also active with our share buyback program, having reduced our share count by a further 350,000 shares in just December alone. And the result of these buybacks is that we now have one of the lowest share counts in the royalty sector. This is something that we're really proud of. And as I said earlier, it's this kind of tightly held share count that provides the big jumps in share price when good news comes. So our two bulk commodity assets are located in my home province of Nova Scotia. Donkin, which I'll talk about in a moment, is a producing asset. We have 2 to 4%, a 2 to 4% royalty here. It's paying us royalties. Black Point, a little bit to the south, is not producing, but it's permitted. It's awaiting a development decision from Vulcan. They're a 25 billion market cap crushed stone producer, the largest of its kind in North America. We have a per ton royalty here, and it pays us about $125,000 a year in advanced pre-development royalty payments, which might seem small, but actually covers about a quarter of our overheads. Regarding Donkin, put simply, there is no other steelmaking coal mine in the world that sits this close to a deep water port. None. The average distance from mine mouth to port is usually around 250 kilometers. Donkin, which has received over close to 300 million in mine site development costs, sits 30 kilometers from a deep water and an unused port that by mid-year will be capable of handling Cape-sized vessels, making the harbor one of the very few deep water ports on the entire eastern seaboard capable of handling a vessel of that size. And the level of infrastructure that exists for Donkin in this part of the world is truly exceptional. There's been so much work done over the past few years, several years, in the Sydney Harbor specifically, to deepen it and to improve the infrastructure above water to support these larger vessels. And all that work is paid off. And it looks like the Cape-sized vessels will actually start docking in the harbor by the summer of this year. I'm actually told it could be the spring. So being able to ship, 120,000 ton bulk ton carriers at once versus 60,000 tons will be really important to Cline as Donkin ramps up its production. At Donkin today, there's 2 coal sections operating in 2 different parts of the underground mine, both cutting coal. There's about 130 people on site. The operation is in the ramp up phase, ramping up toward 3.6 million ton per year production. That's ROM, run of mine production. And that washes down to around 3 million saleable tons after going through the wash plant. The plant is producing a semi-soft metallurgical coal that's also, conveniently incredibly high energy, up to 14,500 BTUs. And for that reason, the operator, Cline, can sell Donkin into the thermal market, like the one that still exists in Nova Scotia, should the pricing be right, or it can opportunistically sell into the export markets of Europe and Asia. But when the mine reaches full production, our royalty will generate anywhere between 7 million and 30 million, the delta being related to coal price. Keep in mind that the average price right now is, well, for the past few months, has been range bound between 200 and about 350 Canadian per ton, having gone, well above $400 a ton last year during the peak of the energy crisis. But even on the lower end of $7 million in royalty, this still affords Morien an 8-cent annual dividend, which is, over 12% yield on today's share price. That's the low end. At $300 per ton coal Canadian, the royalty of 23 million in the gray bar allows for about a 25-cent dividend, which produces a roughly 40% yield on today's share price. We reinstated the dividend in December. We paid a special dividend of half a penny just before the holidays. And the regular quarterly dividend that commences this quarter is expected to be about a quarter penny. And we intend to increase that proportionate with production increases at the mine. we're so serious about this whole dividend strategy of ours that we've actually built a dividend calculator on our website that lets you toggle various metrics like coal price and production and payout ratio. Just please check it out just to give yourself a sense of just how high this dividend could get. Coal markets, I'm getting asked less and less by shareholders these days about the status of coal markets. Anyone that's followed commodity markets knows that coal was the top performing commodity in 2022. The energy crisis helped with that, sure. The energy crisis is still underway, but the crisis didn't save coal. It was doing fine. Even before the invasion of Ukraine, coal demand in 2021 hit an all-time high, surpassing 8 billion tons for the first time in history. It grew by another 100 million tons in 2022. It's supposed to grow again this year, and then again in 2024, where the models stop forecasting, frankly. This is just not a commodity that's even remotely in decline. Despite media reports, coal is thriving. ESG-related financing constraints that are everywhere now, from east to west, have made it very difficult to finance new coal startups. And so while coal demand goes up, the pace of new supply coming online is reducing. And this fundamental supply-demand imbalance is really what supports coal demand long-term. So just to wrap it up, one thing that you might notice with our presentations is that the messaging doesn't change a whole lot from quarter to quarter. There's a consistent theme. We have significant exposure to the upside at Donkin, where we have cash flow coming in. The re-rating potential from this exposure is large, to put it simply. These are long life annuities. They're hard to find. They're on commodities that are fundamental to the general functioning of everyday society. We have driven down overheads, so we don't have costs. We don't compromise our balance sheet for the sake of frivolous growth. Any growth that we do undertake in the future must be meaningful and be a complement to what we already have. We have a track record of returning cash to shareholders through buybacks and dividends. Put simply, this company was created to be a cash machine for shareholders and nothing else, designed to pour money into your bank account. And that's what we can look forward to as Donkin ramps up its production.
Thanks, Dawson. That was a great update. I have some questions, and
Sure.
As I mentioned before, anyone in the audience that would like to ask a question, feel free to input it in the Q&A box.
Okay.
So my first question is, with the Donkin mine restarting coal sales in Q4 2022, when do you expect to resume receiving royalty cash flows from the asset?
Yeah, so the sales started, I think, on October 29th or 30th at the very tail end of the month. And then November saw a little bit of increased sale activity. The emphasis was on growing the stockpile and improving production and training up staff. But no, what you said is correct. Sales started in Q4. So Q4 will be our first royalty, and our royalty arrives 45 days after quarter end. So our first check will come in on February 15th.
And since Cline is privately owned, what level of disclosure do you receive with regards to operations at the mine?
They are private. And to be candid, they're under no legal obligation to report quarterly results, obviously, like any other public company would be. And while that can occasionally present some challenges in terms of us maybe providing, more detailed forward guidance to shareholders, it's manageable. Like we take a lot of comfort in knowing that Cline is a very experienced operator, an underground coal operator, great track record when they were operating in the States from 2008 to 2015. And we wouldn't want to see any other organization run Donkin, frankly. And also we do have a dialogue with Cline, and they host us on site at least once a year for a site visit. In fact, Morien management and directors were just at Donkin in late November, and we had over an hour of Cline's time. And these visits give us a real sense of how things are going. So we don't feel it to be an encumbrance in any way.
Do you have any visibility on how long it'll take them to ramp up to 3 million tons?
Obviously, they're in ramp up mode now, having just restarted production. The focus now is training new staff. It's a bit of a unpredictable variable. I was shown a productivity chart of underground operations at Donkin, and the productivity of sort of your A team crew to your C team crew was quite extreme. So training new staff, that's happening. It'll be slow at first, but I would expect quarterly production to steadily grow throughout 2023 and hopefully, end the year at a run rate that's exceeding 1 million tons, perhaps more than that. Getting to 3 million saleable tons likely requires a longwall mining machine that's over $100 million in capital. We've always suspected that's part of their plan. Cline is a longwall mining company that they ran 3 of the 4 most productive longwall mines in the United States in their prior company. Cape Breton, it's a longwall region. They've had 7, highly productive and successful longwall mines in the Cape Breton region, very flat coal seam. So we're hopeful that we'll see a longwall in Donkin's near future. Until then, it's a story of ramping up and watching our royalty grow with it.
And actually, I had an audience question around the longwalls. How thick is the Donkin seam? Cline doesn't use longwalls. Why not? And what is Cline's all-in cost of production per ton?
The reason why they don't have a longwall now is because you have to build out longwall panels first. And so you can't have a longwall mine without continuous miners doing the early development work. And so the continuous miners are these little Pac-Man machines that, both go out parallel to each other and create this sort of rectangular longwall panel. And then when the panel's done, they install a longwall at the end of it. They retreat mine back and clear that coal out at a very, very high rate of productivity. So Cline they're longwall guys. The person in charge of Donkin managed Foresight Energy for Cline in the US, where they had 3 very productive longwall mines. These guys know what they're doing. Donkin will likely be a longwall at some point in the future. I don't have any detail as to exactly when. These longwall panels can sometimes be 3 kilometers long and over 1 kilometer wide, so it takes a little bit of time to prepare them. I would see to answer the third part of the question, the production cost, I would be guessing on. I haven't asked that question, but I would guess with continuous miners, the production Canadian dollars per ton would be around 60 or 70 Canadian a ton right now. And with a longwall, it should be below $40 or $50 a ton.
I think you've addressed this question, but we had a question come in just about expansion plans. I think you've addressed the ramp up and the longwall potential. Is there any other expansion plan that you can discuss?
When you see or hear gold companies talking about $2,500 an ounce gold or $3,000 an ounce gold, they're talking about the far out blue sky, and some shareholders like to hear that. We don't often talk about it because we don't finance and we don't have any need to be overly promotional, but certainly that secondary expansion potential of Donkin and the true blue sky would be them pushing through to something closer to 4 or 5 million tons a year. So I think to answer that question, we're in phases. The first phase happened. Mine is restarted. They're in ramp up phase, and we'll get to maybe 1 million, 1.5 million tons. The next phase comes with a longwall where we get to 3 million, 3.5 million tons. Anything after that would be part of that blue sky, and maybe we see 4 or 5 million tons at some point in the next 5 to 8 years.
And can you remind us why Donkin stopped production?
Complicated story that took us the better part of 300 words in a number of press releases and quarterly disclosures. And so if you're looking to get the well-articulated answer, I would refer viewers to check out our quarterly reports in 2020 and 2021, which went into it in detail. But they had experienced a couple roof falls at Donkin that aren't discriminatory to Donkin. Roof falls happen in every underground mine, whether it's zinc, copper, or coal. That wasn't what was concerning. In fact, nothing was really concerning about it other than the border shutting down. The one of the issues with Nova Scotia is that because we haven't had coal mining in this part of the world in really 20 years, we don't have a lot of in-house expertise at the regulatory level to manage and provide input when roof falls do happen. And so our regulatory body was relying rightfully and fairly on the US agency MSHA to dictate what needed to change from a regulatory perspective, if anything, following roof falls at Donkin. And that process, although slow at times, was working until the border shut down. So we had roof falls in February of 2020. We all remember what happened in March of 2020. The border shut down. The regulators from the US couldn't cross the border. And so the mine was shut down. And there was a lot of reasons that led to the shutdown, but those were some of the primary reasons from my perspective. And so what happened, fast forward 2 years, in third quarter of 2021 was really when the energy crisis started to really happen. If you might recall, coal prices were starting to increase, but we were already over $100 a barrel oil at that point in time. And this is 6 months before Putin invaded Ukraine. And so when Ukraine was ultimately invaded, it just turbocharged an already tense energy situation. And by that point, Cline had already been back. They were visiting the mine in early 2021. And so I think they were already putting things in motion, but when the invasion happened, it just turbocharged everything and fast-tracked everything. And the mine was, I think they were submitting documents to reopen it as early as June of 2022. And here we are. I hope that answers your question, but as I said, check out the quarterly reports, the financial statements, and the MD&A. They'll have a lot of that written down in detail.
So a couple more audience questions. Do you think that Cline would ever purchase Morien outright to remove the royalty?
There's no buyback provision, so ultimately it's you, the shareholders, that get to decide, obviously. And so it would need to be a fairly compelling premium to our current share price and market cap for that to be convincing for shareholders, who I think, based on, I talk to 70% of the shareholder base, which is, I think, unique for a public company, but we're small and I put my cell phone everywhere, and so people can call me whenever they want. I don't think many people are selling for anything less than $1.30 or $1.50, and even that's a discount to our true NAV. They could, of course, come to us, perhaps before they put a longwall in, or before they take it to 4 or 5 million tons, if that's even part of their plan. That would make sense. But with a longwall, it's a big margin business, and there's room for royalty companies like Morien to exist. I think there's a part of Cline that probably sees us in some ways as a bit of a partner to them. You could also look at Cline's track record in the US. They were paying a royalty with Foresight Energy to NRP, Natural Resource Partners, that was upwards of 50, 60, 70 million a year. So they have a history of not buying the royalty companies. So it's possible, sure, but not part of my calculus. Certainly part of some within Morien, but not part of mine.
Are there any abatement of emissions initiatives by the operator? Sorry, I stumbled across that. I think it's just
emission abatement.
Yeah.
Yeah, I'm told, yet to be confirmed, so don't hold me to this, but I'm told that they are about to install a methane capture system, like an $8 million methane capture and utilization system at Donkin. So that would fall into that category. And that would be the main thing that they would need to be looking at. There's really nothing else they could do. It's not an open pit mine, so they don't rely on highly pollutant diesel machines and equipment. It's an underground mine that relies on electricity supplied from our Nova Scotia grid, which is increasingly green. And so really the only thing they could do is what they are doing, which is the carbon capture system. Sorry, the methane capture system.
You mentioned Nova Scotia. I had a question about, would you mind talking about Nova Scotia as a jurisdiction?
I don't have a whole lot of experience with the jurisdiction of Nova Scotia. I think it's gotten a little bit more complicated because it's just a little bit more crowded now. And it doesn't have the same sort of mineral fertility that, say, BC or other jurisdictions would have. And so a lot of the things have already been picked over. We're lucky to have what we have. We're lucky to have them both be permitted and not have to worry about that. We have great relationships with First Nations and local communities. And so we're not actively seeking out other projects in the province. And although I sit on the board of the Mining Association of Nova Scotia, and I hear a lot of people lament over some permitting issues, I don't have direct exposure to it. And so I don't have much comment to that.
And then switching gears a little bit, what is the royalty rate going to be on Black Point?
It's undisclosed. It's a per ton royalty. And all I can tell you is that at full production, it might be getting us close to $1 million a year. It's a 50-year project with no end to the royalty and no buyback provision.
And can you remind me of the timeline on that?
There is no timeline. Every 2 years, Vulcan has to submit a request to the Department of Environment, Nova Scotia Provincial Department of Environment, requesting another 2-year extension if that's what it desires. So they're under no obligation to develop it. The province seems okay and willing to let Vulcan wait for the right time. Vulcan's sincerity for Blackpoint is real, and we trust them as a partner, and we're not trying to pressure them into develop it. If anybody knows when the market is right for Blackpoint, it's Vulcan. I think one of the things that's changed in Vulcan's universe today versus when Vulcan bought the project from us is that they've been actively acquiring projects in the US, US aggregates, CEMEX, CEMEX in New York. It's opened up a lot of the quarries and marketing opportunities to them along the Eastern Seaboard that would have previously been fed by Blackpoint. And so I think there's increased competition internally within their development queue, frankly. And so what we'd be looking for longer term is an increase in rail costs, and perhaps the opening up of the Gulf market, which they don't have a lot of access to. But Vulcan's they have a 50 to 100-year vision for that company, and I truly believe Blackpoint slots into it at some point. It's a bit tricky trying to pinpoint exactly when that is. And until then, as I said in the presentation, we're happy to take 125,000 a year and have that cover a quarter of our overhead. So we're happy about it.
What are the prospects for any other new royalties?
We were actively looking for other projects, particularly in the crushed stone space, but all bulk commodity based in 2018 and 2019. And we'll continue with those efforts once our treasury gets back to a spot where we can make an acquisition. It's certainly part of our thinking. It's just a little ways out.
Okay. And then in terms of what kind of royalties you'd look at, it would be in the aggregates, you think?
Yeah, crushed stone, salt, additional coal assets we've looked at recently, pretty much anything in the bulk commodity space in North America. I mean, I've done a fairly good, as you know, inventory of the publicly and privately traded royalty companies in North America, Europe, and Australia. And I haven't restricted it to mining. I've included oil and gas, and I've looked at what they're looking at, and what we try to look at is what no one else is looking at. And so the commodities that I just listed would fall into that category. Very uncompetitive space, but attractive for us because we want stable long-term annuities that complement our portfolio.
So multiples are a lot more, a lot lower, a
Yeah.
lot more palatable.
Yeah, I think so, or
forward.
not. I mean, in some cases, these quarries have been in production for 50 years and have another 150 years left on them, and they're producing assets. And so you may have to pay an even higher multiple than what you might have to pay for an early stage gold project. That's just simple valuation work to arrive at whether or not it's accretive. I think that's one thing we're good at, is finding out whether or not things make sense, and we don't feel pressured to acquire assets. We're looking to acquire assets, but you're not going to see us start staking claims in French Guiana for gold. It's going to have to fit with what we have, and it's going to have to be meaningful. So we'll see.
Makes sense. And then I had two questions that are somewhat related. So it's fair to say that now that Donkin's future looks more settled, that management will have more time on their hands. If so, what will that time be spent doing? And then another question was just wondering what your corporate marketing plans over the coming months are.
Yeah, those answers to those two questions, I think, are combined. So in terms of what we're going to be doing, marketing primarily, and also looking at other assets to complement the portfolio. And so a large part of what I'm going to be doing and what I was doing was related to that project generative work. Morien hasn't traditionally also really marketed itself very much. So I don't think there's that many people that are aware of this rare buying opportunity that exists for what could be a dividend juggernaut of a company in the next couple of years. Essentially what has Labrador Iron Ore Royalty Corp, not to shoot for the stars, but why not? I mean, they're basically who we want to be when we grow up, plus or minus a few additional royalties added into the queue, which they don't have. And so I think marketing will primarily be what we're doing going forward for at least for the next 6 months.
And are there any specific regions you're looking at? I did have a question about whether you would pursue an OTC listing, which I think can all be answered combined.
Yeah, so we've looked at we're aware of the costs, and our volume in the US pink sheet listing has gone up by a big order of magnitude. And we have new shareholders in Michigan and Connecticut and Louisiana, California, and Texas now. And I talked to them, and most of them are okay buying across the border or buying on the pink sheet. So I'm not convinced yet that it's the right avenue for us. If it wasn't so expensive, we'd probably already have it, but we're very, very cost sensitive at this company. I think we'll continue to be cost sensitive even when we're getting, 7 to 30 million a year in royalties. So we might list, but the first part of your question in terms of where we'll market, we'll restrict it to North America. I think for the time being. I've been to Europe and I've done those marketing roadshows, and I haven't seen a high level of liquidity come out of them. I know our audience, and I know the audiences that we need to find, and I feel like they exist in spades in the US. I don't think we need to reach much further than the US market. So that's where we'll focus.
And they know the coal markets.
And they know the coal market, right? If anything, any other jurisdiction outside of US and Canada would be Australia for the obvious reason.
Mm-hmm.
Yeah.
So just going back to uses of cash, I mean, you've got the share buyback, you've got the dividend announcement, and then you've also got the potential use of cash for potential royalty acquisition. How do you think about that? How do you look at your uses of cash over the next couple of years?
I mean, it's a monthly, if not weekly, endeavor of cash flow management with the CFO, Suzanne Willett, constantly talking about where our cash position is and how aggressive we want to be on the buyback. And there's a bit of pushback and debate on how aggressive we should have been in December. And, I think we were quite aggressive, and I'm very happy about it. We had money left in the budget, and we spent it acquiring 350,000 shares. And it might've been one of the last attempts that we had to do that. But going forward, the interplay between the dividend and the NCIB will become more skewed to the dividend. And I think the NCIB over the short term, meaning maybe 12, maybe 18 months, it will be there. We will renew it towards the end of this month, like we do every year, and it will be active. It's just a question of how much. I would say it's going to be more opportunistic. Like today, we're down a little bit, and I can't legally say whether or not we're buying on the NCIB or not. You'll see at the end of the month when we cancel those shares, but we'll be there to catch falling stock if it meets our threshold. But we're not going to be as aggressive with the NCIB as we once were. Our focus going forward is going to be on growing the dividend and also, to an extent, trying to regrow the treasury. But if a longwall is in play at 3 million tons, you can be issuing a very meaningful dividend and also growing your treasury in a meaningful way as well. So I think we can accomplish both objectives there. By that point, I don't think the NCIB is in play anymore.
And then in terms of the dividend, I mean, you reinstated the dividend, small one, starting in Q1. You also had a special dividend. What's your preference? Do you want to have a meaningful ongoing dividend, or will you dividend out excess cash at the end of the year in terms of like as a special dividend?
But the focus will be to have a regular quarterly dividend that's tied to production and coal price. And so there are companies out there that just wait for the end of the year special, and that's fine, but that's not going to be our approach. We want to grow this dividend. We want to see the yield go up and the share price to chase that yield. I mean, that's going to be the driver for us going forward over the next few quarters. So it'll be a lot of what we're doing internally is trying to figure out what our free cash flow is and the best mechanism to determine free cash flow, and whether or not you include tax and option proceeds. And I think we've come up with a fairly good formula that makes sense. We're just waiting for Donkin to get moving a little bit more before we can grow it. But okay, our plan will be to grow it a lot, and hopefully shareholders will be impressed with how quickly we do it.
And what's the risk of future roof collapses?
I'm not a mining engineer, but I've read a lot about it, and they're not uncommon. I'm not going to say that they'll have more, because I'd be speaking out of turn, and I don't know that to be true. But I do know that the falls that have happened were in areas where they knew they were going to happen. Falls don't happen suddenly or quickly. They happen very slowly over the course of 2 to 3 weeks. By the time they've happened, they're effectively marked off like crime scenes, and it's of no surprise to anybody. And the solution generally is just pure engineering, longer roof bolts or crib supports, and you move on. So I'm not spooked by it. I don't think the regulator is either. If they were, Donkin wouldn't have been reopened, frankly. I think the public has a skewed perception of the danger of them, and that's fine. But if we see more roof falls, I don't think we should be concerned.
And likely you'll be able to get the proper people in to do the inspections, and there won't be a big delay because of what happened in 2020.
I would think so. I don't know if things have changed in terms of how they're going to regulate roof falls, or maybe they're still the same. I'm not in the boardroom with Cline when they're talking with the regulator. I'm not even a fly on the wall, and I don't get updates on that dialogue. But I can tell you that the way that it was working before was, in fact, working fine. I also think at these coal prices, people would be operators would be willing to endure just about anything. So I'm not too concerned about it.
Oh yeah, I had an audience question that's exactly the same as my final question, which is, can you give us some of the catalysts over the next 3, 6, and 12 months and what you're excited about?
Yeah. 2023, this year is going to be about Donkin ramping up, obviously. Our royalty is going to be ramping up with it. And that's going to put us in a position to increase the dividend. You know, there's a window of opportunity here for people, for investors to take a position in MOX, which is very tightly held, in preparation for a larger dividend and continued share price growth with production expansion. And the ultimate catalyst is Cline hitting full production, allowing Morien to pay a very meaningful dividend. So although I haven't nailed that down for your listener in terms of quarters, I think I've described what the future catalyst should look like.
And people can go to your website and figure out what they think they're going to get in terms of dividend based on their projected inputs.
Yeah, or they could call me as well. You know, my cell phone number isn't on the homepage, but if you go to any press release and just scroll down at the bottom, you'll see my cell phone there, and anyone can call me at any time. You know, I receive calls somewhere between 5 and 20 every day, people just looking for context on Donkin. You know, just to your earlier point about them being a private company and there not being publicly available guidance, then, you know, reach out to me and we can have a conversation about it.
Okay, great. Well, I don't have any questions left and I don't see any more audience questions. Is there anything that you wanted to talk about today, Dawson, that we didn't cover?
No, those questions were great. I think we covered off everything.
Well, I really appreciate the update. And I should have said this at the beginning, but I am a shareholder. We usually hold stock in the companies that we work with, but I did pick some up recently. So I'm really excited about this year. I think it's going to be great.
Great. Thanks, Deborah.
And yeah, thanks for your time. Thanks everyone who participated. And if anyone has any follow-up questions, feel free to reach out and I will get those answered for you. And have a great afternoon.
Thank you, Deborah. Thank you, everyone.